All right. Hello, everybody. My name is Bronson Hill, and I work with Nighthawk Equity. I am the Director of Investor Relations. I'm here today with the one and only Michael Blanc. Welcome, Michael.
What's going on, Bronson?
Oh, good to have you today. Good to talk about apartment investing. One thing I'm passionate about is passive investing. And so wanted to talk about a question that comes up quite a bit when I have calls with investors is, what about apartment demand? Why is it growing?
Well, that's a great question, and there's a variety of reasons why they're growing. So let me go over some of them. For example, the housing prices are continuing going up. So, for example, last year the monthly median priced home increased $175 last year, up to $1,700 per month. So it's the median house. And that is widening the gap between owning and renting. So that's driving rental demand. Young adults actually prefer renting. It's partially money driven. They don't have the down payment, and again that widening gap. But also they kind of saw what happened to their parents in 2008, and some of them lost their houses. Maybe friends lost their houses, and so they don't really like the way that made people feel. And also, they want a little bit more of their freedom. They want less responsibility. They don't want to take care of a yard. And so that combination, the young adults, is really driving the rental demands as well. From a market perspective, the type of buildings that we invest in, Class B and Class C, is affordable housing. There's some very interesting things with that. For example, the vacancy rate has been the lowest this past year than it has been in 19 years. 3.9% vacancy rate in Class C. And I think one of the reasons for that is because you can't build affordable housing anymore. So when someone wants to put up a multi-unit housing, because of the cost of construction, it's going to cost upwards of $120,000 per unit. Typically, we buy things much less than that, sometimes even as low as $40,000 a unit or $50,000 or $60,000 unit. In other words, you can't build more affordable housing. And so when people are looking for affordable housing, which they do, that demographic is always there, is continually growing, they can't build it. So in other words, when someone puts up a new apartment building, it doesn't really affect us as much as well. So we have these two, the combination of the rental of more affordable than buying, as well as you can't build more affordable housing, keeps that demand really, really strong. And you see it with the vacancy rates last year.
That's great. No, I actually, there's a nonprofit that's called weareapartments.org that we came across. And basically what we found is that they're projecting we're going to need 4.6 million more apartment units by the year 2030. So there's a shift in demographics that are happening. And obviously, it does, have to do with younger people, has to do with families, has to do with a lot of different reasons. But can you talk maybe some about what demographics are causing that kind of growth in apartments?
Yeah, we talked about the young adults. And by the way, a lot of this stuff is in this Marcus Millichap report. I don't know if you can see that, but it's a 2019 multifamily North American investment forecast. So this is free from Marcus and Millichap. I think you have to give them your email address, and you can either download a PDF or you can read this. But this is really, really super informative, both for passive investors as well as active investors. So a lot of stuff I'm talking about here, you can find in here as well. But you asked about demographics. So young adults definitely is driving that. From a growth perspective, from a more geography perspective, if you look at the way where the population is moving towards, it's definitely moving from the colder climates to the warmer climates, and that is largely driven by the baby boomers. I know personally at least three couples who are relocating or have relocated to Florida or North Carolina or South Carolina, and it's just better for them. There's a lot more things down there. The weather is better. So when we're investing, we tend to invest in some of those warmer climates as well, and less so in some of the colder climates.
Sure. And why is this important for passive investors to understand? I think, there's some concerns people have of just if I invest and, if there is some sort of market change or whatever, like, why is that important to understand that the demographics are growing for apartments? Like, why is that if I'm an investor?
Yeah, I mean, a couple of reasons that this is really interesting for investor. One is from what is the demand perspective is you're always thinking what's going to happen in a recession or a market correction, right? As an investor, that's always what I'm concerned about, and that's where I want to know where are the trends. So, for example, all real estate is not created equal. You could have a market cycle for residential housing, a market cycle for office, a market cycle for multifamily. So, if you understand the demographics, the drivers for this asset class, and even within the asset class, we talked about Class A versus Class A C. So it's considerably different. So understanding that helps you make better investment decisions. So when you're, when the neighbor, reads a story on CNN about some kind of real estate crisis, the sophisticated, educated investor will ask questions like, well, what kind of real estate is it? What within the real estate, what asset class is it? Oh, and then within it, where is that market? So you could have, for example, Detroit for some reason in a meltdown, or the demographics are eroding, versus, for example, Huntsville, Alabama is improving. So you have to look. The educated investor looks at all these trends to make better decisions.
So Michael, thanks for that. Based on that information, what's one takeaway you'd give for our investors listening?
Yeah, I think it's really important for the investor to be educated about this a little bit, and to be able to ask questions. If they're evaluating an opportunity, ask the questions. Or what asset class is it? Well, it's multifamily. Okay, what type is it? Oh, it's Class A, Class B, Class C. Where is it? And typically when opportunities are presented, there's typically a market analysis based on that, and you want to understand that, and you want to ask questions about that. What are the drivers in a particular city? And even within a city, the submarket is very important, because you could have any city, and then there are submarkets who are less desirable and are shrinking, and versus other submarkets that are very desirable and growing. Even in a relatively flat market like Memphis, well, you have flat markets, you have ghetto areas, and then you have really growing areas. Well, you want to understand that. Okay, so on the macro level, what is the city? And what are the drivers to that city? Is it growth? What's the job projections? And then what is that submarket? Tell me about that submarket. So as you're evaluating these opportunities, you want to kind of go from macro level down. So we talked about the macro level of multifamily in general. There's macroeconomic drivers that continue pushing demand for multifamily, even through any kind of market correction, and that's great. But now you got to ask questions around the exact city or the area that are in, and then within that submarket. So I think the key takeaway is just make sure you take a look at an opportunity from a top level down and ask questions all the way down to the submarket, in addition, of course, to evaluating the property itself. But the key thing is, even if someone were to make a mistake about the property itself, let's say we overestimate the rents, or we can't quite execute on the plan, if that submarket, right, a rising tide lifts all boat, if that submarket is good enough, it will fix and eradicate those problems over time. If there are no problems, it'll just amplify the business plan. So it's good to know exactly where that property is located.
Awesome. Thanks for sharing, Michael. And I wanted to thank each of you for joining us, because the thing that you're really doing is you're educating yourself. And that's the first thing that you can do when it comes to investing and really taking care of your investments. So wanted to just show you one of the next steps that we have for you is go to the michaelblanc.com/reports, and that will compare apartment investing with the stock market. Michael's done an amazing report, put some stuff together you think you'll find very, very interesting, especially if you're kind of new to this and you're kind of learning, hey, is this really for me? That's a great place to go. The second thing is, if you are interested in being involved with deals that we do, we have the Nighthawk Investment Club. You'll go to nighthawkequity.com/join, and you'll set up a call, and we'll basically get to know you and let you know about future deals that are upcoming. So thanks again for joining us, and we'll see you on the next video.
Hey, make sure you grab this free report before you take off, and subscribe to this YouTube channel right there so you don't miss these weekly videos, and check out this other passive investing video. Check you guys later.